Well, I'm going to the city and I'm gonna do a city show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone exciting, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward at what might happen in the next week, and hopefully lots of great ideas and opportunities for you throughout this show. Well, the stock market gained ground last week, moving to a recovery high, though all the gains came on Monday. Last Sunday night, index futures took off after Fed Chair Powell was on 60 Minutes. He was extremely negative on the economic conditions, pulled no punches really about that, and talking about how long these poor conditions could last, even well into 2021. Well, that was good news for stocks. As Powell said, they're not close to being out of ammo, and there's no limit to the Fed lending. Well, they actually should have said no limit to Fed borrowing, but he wants to put that positive spin on it. And when asked about where the money comes from, he said, well, we print it digitally. What's scary is that the Fed, or Powell, is unconscious to the cost of the future, or he thinks it's worth it. I heard a quote recently that I thought was great to share, and it said, enjoy your future because you're spending it now. Back to Monday. Well, the markets got a second lift pre-opening on the news that the pharma company Moderna had positive phase 1 results on a test that they did for a vaccine for COVID-19. Fantastically, 8 people developed antibodies that exceeded those of the patients that had recovered from the disease. So that was fantastic news. But then the markets moved down Tuesday on a report that the study didn't produce enough critical data. But I'm telling you, there could be a lot more coming on that, and that would be just great news if that turned out to be some miracle answer. The rest of the week was a narrow chop, as it really just barely nudged out the high that we made in recent weeks, and that is probably going to continue to happen in this narrow chop, we believe. Earnings reports, they were on both sides of the market. There was some horrible economic data, and it's going to be getting very much worse. Of course, that doesn't really matter because bad news is very good news these days, except when you get to very high tensions that are increasing now between the U.S. and China. China is now cracking down on Hong Kong, potentially a huge loss of freedom for those people. And the U.S. and China relations are very strained at the moment. Kudlow, who says a lot of things that I think are ridiculous, says that there's no threat to the trade deal that they have with China. Well, based on the economics in the world, you got to wonder if that deal is worth anything anyway. And phase 2 is maybe years down the road if we get it. And of course, if something does flare up in a big way, that could be a big problem for the U.S., China, and world markets. Hang Seng, the Hong Kong market, had its biggest decline in 5 years on Friday, and pro-democracy protests are scheduled in Hong Kong this weekend as civil unrest is sure to build. So traders are reaching for some protection here on Friday with the bonds moving up, the dollar moving up, and the market's very much dead in the water in here. Stocks are likely to remain in a churn mode in the near term, and we think that outside of any nightmarish problem that happens in Hong Kong and a strong response by the U.S., that we're likely to stay in that mode right now, kind of churning our way up and gaining some ground in through mid-June. And then the risks really go up, where we expected in the summertime to get another sharp decline, and we think that is coming. I'm going to show you that as we get into our short-term view, where I'm going to show you a lot of charts as we look at 5 major markets. And for the S&P 500, we'll be showing you the patterns and projections and the key important levels that we look at. So we're looking for a pretty significant period of risk that comes, but not quite yet, just a few weeks away. For the week, the stock market in these last 4 days being very quiet, still gains with the S&P 500 and the NASDAQ up around 3% gains. The Russell up around 6%, as money is moving out of the stay-at-home stocks, the ones that benefited from it, into some of the very beaten up stocks, as investors are looking for a chance to get better alpha. The likelihood of the stay-at-home stocks that soared moving lower, I think, is gaining. And if you're a member, level 2, 3, or 4, you can watch the video I put on Thursday in the stock sectors segments of our library. And I talk about 16 stocks that I think are high-quality sells or shorts right at this moment, and I give you just unbelievable detailed analysis on those, and you're going to want to watch that video. So if you're not a level 2, 3, or 4 member, you probably want to become that. I'll tell you a little bit more about that in a moment. So stocks gain, and they're holding on to it in this kind of dead stock market that we are now at midday here on Friday. The bond market, 30 years, they lose about a point. They're also very dead in the water, as we have inflationary threat, deflationary threat, and a Fed that doesn't want the interest rates to move at all because, well, they're not going to go to negative rates unless there's some absolute disaster out there. How could it get worse than it is now? And they don't want to go to negative rates. They know how bad that would be for our economy if they did that, and for the financial sector. So they're going to do as the Fed chairman says. They're just going to print forever, and they're going to keep these rates just stuck. So the bond market has not offered a very tradable situation. Gold stalled as it lost about $18, $19 on the week at this point. Does have a bull flag set up, so we're looking for the potential for the upside. Silver still a tower of strength, gaining over 50 cents on the week on what is quite a great pattern there in the silver market. We have been great in that analysis in the metals, and thank you for everybody who has written us those great emails regarding that. The dollar is also very stuck, moving up here on Friday in this safety bid because of China, and still loses about 0.5% on the week. The oil market gaining close to $3, and it moves down here on Friday based on demand fears, again because of the potential slowdown because of China. And we're looking for a little more downside in there, but things have greatly improved in that whole complex, the whole energy complex. So this is a time period, or the time period where the oil market could have got slammed again. It has not. The June contract has expired, so nothing like we saw in May, where there was a huge fear about the oil situation and where anybody was going to put oil if they had to take possession of it. And now that's alleviated in some ways. So demand situation supposedly better in oil, and the storage situation slightly eased. So the oil market has gotten much firmer. That's it for the opening. I want you to absolutely go to the askSlim.com site and explore it, and make sure that you follow us in our social media out there. Subscribe to us on YouTube. If you like this video, give it a thumbs up, and please do share it. Click that little bell if you want to get notified after you subscribe to us, and then follow us on Twitter at askSlim. You want to know information about our memberships, write to Matt at askSlim.com. I'm going to tell you a little bit more about our memberships right now, as I want you to see some just phenomenal things that we offer in our level 2 subscription, which does include that membership, everything that's in level 1. The one thing that I really want to show you, I'm going to put up right now what is a live chart for you to see. It's actually a live chart grid with 3 different things on there. What am I showing you here? Well, what I'm showing you is the S&P 500, the NASDAQ, and the Russell. This is our stock index report, SIR, we call it live stream. And what we give you is amazing information on here, where we're giving you the ways to understand how to make better directional decisions, where the market is likely to stop in one direction or the other, or in these yellow acceleration zones, how you catch the bigger trades. And the key to success is to be able to position yourself so that you are in the right direction for the impulses in one direction or the other. And that generally happens when you look at the acceleration zone. And you could see right in here, as we had a direction that was on the downside here in the NASDAQ, and the likelihood that it would get some support in this green support zone right over here. You could see a similar thing here. The S&P 500 hasn't quite made it through. We have a very, very great record on how it acts when it gets into acceleration zones. And it completes that distance through there at a very, very high percentage of the time. Also, you're going to want to know these support and resistance levels, and you can use this for pair trading because you could see very clearly how the NASDAQ is quite a bit stronger right over here as it gets into the support and holds. The Russell compared to the NASDAQ, which moved down pretty significantly right over there. So you can use it for pair trading. You can use it for just each of the individual indexes, and you can just convert this over to ES or SPY or whichever of the indexes you trade when you just use this fantastic information every day. This comes out before the opening every day. It takes hours of work. This is manually done every single day. And our viewers absolutely loved it. We get tons of emails from people who have been just doing so much better in their trading since they've been using this. This is a level 2 content where if you're a level 2, 3, or 4 member, you do get this. So I'll tell you a little bit more about level 2 because it's just an amazingly broad piece of membership that is really beyond, I think, what you're going to get anywhere else. You're also going to get 9 categories of videos. I've produced over these years over 500 videos. Wednesday we do Future Speak. I analyze 24 different futures contracts. It's very deep analysis. I talk about correlations. I talk about each of these individual futures contracts, and it's just unbelievably broad analysis. And we get it is our, other than Market Week, it is clearly our most popular video that we produce every single week. Tools for Techs, we have more than 80 videos in there that will teach you all about using different studies and understanding trade setups and understanding where support resistances are, and so many studies that we look at. It's just an unbelievably broad amount of analysis that we share with you how to use these technical tools. Trader psychology, well, for 24 years I've been a personal growth facilitator. I'm certified in that, and I combine trading and trader psychology together. There's a huge number of videos in there that will really help you. IRAMO, that's for investors, a little longer term things in there in videos. Stock sectors, like I did on last week, where I talked about the stocks that were ready to peak based on the stay-at-home environment that we're in. A big picture analysis, I do this on the major markets maybe once a month, but I pick a market that I think is at an important level, and I bring you some great information about that. Style, strategy, and plan, everything about trading. I talk about so many things in there. And then we have askSlim Live that we do for our members on Tuesdays, and we put those recordings in there, plus any special briefs or special videos, we put them in there. And of course the Market Week Archive, which you can look back and look at all of the analysis that we've done on Fridays and just learn a ton from that. So you get the stock index report live stream. You get our huge library in here. You also get our stock index report a daily report that shows you all of our charts and the little longer term charts. Also, you get our weekly stock index report, our ETF review. You get the Slimulator Momentum Tracker, which is an app that is incredible for investors or long-term position traders. Over 1,000 stocks you could look at, and it's broken down in groups. It's amazing. And of course, our library. All that, $45 a month. How can you afford not to invest in that? And you'll even get a 15% discount if you register for 3 months at a time. You want to have more questions, you want more info about that or any of our levels, membership levels, write to Matt at askSlim.com. Matt is our COO. He is phenomenal, and he will bring you great information. And support us by becoming a member. We have a very large team to bring all of this great stuff. So if you are already a member and watching this, you can check with Matt about upgrading. And of course, please do send all this information to everybody you know interested in the market so they will support us and sign up also. Matt at askSlim.com for all of your questions. That is level 2 membership, includes level 1 and all that information. All right, so now let's get to our short-term view of the 5 major markets. We're going to look at light crude, gold, the dollar, the bond market, and the stock market. We'll always be accountable to what we said last week. We try to get to that, 65, 70% accuracy in about 3 or 4 different ways that we rate ourselves. Last week was 60%. We were only about half right in the gold market. It didn't quite make the upside target, and then got into this little range that we're in right now. And light crude, we were completely wrong because we thought that it would begin its a second move to the downside that wouldn't be as steep as the one we saw in May, but that one hasn't really developed yet. And now we think that the upside that it got to is telling us that the downside is much more limited than we thought. In fact, let's get right into the light crude market while we're looking at this. So what I want you to see is that what we're looking at now is what we call market cycles. So a cycle is measured from low to low, and the distances are very much similar. As you could see, as this cycle and this cycle are pretty close when you look at low to low. And when you look at this one, you could see there's almost no time left. So when you get that, and you really have only a few days left for it to pull back, that's what's called a bullish configuration. So when the configuration is bullish, the likelihood of the next cycle moving to a higher high is better than 70%. So you can see in here, negatively configured cycle gets you a failure and another one, and then a failure and another one. Now we have a bullishly configured cycle, which says that it will pull back by a little bit and then likely begin to move up again. So that's why we're only looking for a few days on the downside. You see where the slim ribbon is coming up and momentum is positive? Well, that again says to us that there's not much downside. The center of the slim ribbon is somewhere in here around $30. This support level right over here is around $28.80. So that's what we're looking for. $28.80, maybe $30 only on a brief move to the downside, and then likely moving up again into that area of resistance up towards the $35 area. Brief down, then up. That's really what we're looking for over the next 2 weeks. Some of the evidence, the conditions of the market have greatly improved. Still, it's in resistance. We don't think that there's much upside, but we also don't think that there's anywhere near as much downside either. So we have upgraded it actually again as the conditions have definitely improved. So that is a look at light crude. The next thing we're going to look at is the gold market /GC. And you can see the cyclical patterns in here. So these gold cycle brackets on the bottom are gold. The dashed silver ones right here are silver. And this was an area that we expected the market to bottom and then begin to move up again. Well, we got the upside move, and then we told our members the other day, actually, that the market looked like it was stalling. Well, that's because of this right over here, where we had that engulfing pattern, and now you could see the triangular shape that's forming in there. The odds are pretty good it's going to try a pop on the upside here, get a correction right here, and then up again. So that's our projection for the next two to 3 weeks as we look at that. It's kind of choppy ahead with an upward bias. Momentum is still positive. It got neutral here for a few days and then turned positive again. Neutral positive, the momentum positive. When the projection oscillator is down here, when the momentum is positive, that is a buy warning. So we're looking for prices to move up again. Though we are looking for this choppiness, we're probably going to stay in this range that we've had. That high was made, as you can see, right up over here, which was at around 1780 area, and then it pulled back over here to about 1715. I got a lot of emails on this day when it pulled down in here, like, because so many people are long and listening to our analysis, which has been positive. And we get some dips and people start to get nervous. So don't get nervous unless gold breaks down under the 1692 area right over here. So the sum of the evidence is the market's in good shape unless it breaks under 1692, which puts the bullish scenario in question. All momentum readings are positive right now, and I don't see any reason to believe it's going to do anything but move to the upside. And of course, that is the highest probability. If the market wants to break to the downside, to me, that would only be under the condition that the dollar soared on the upside, and that would be because of some panicky situation in the world that is leading to another deflationary scare. So the deflationary scare makes the dollar go up, makes the gold market go down, and other markets. I don't really see that right now. So some of the evidence says we're looking for the upside. Now we're going to switch over to the dollar, which is getting a rally right now. We've talked about the tight range that the dollar has been in. Look at that. Can you see the clarity in the cyclical patterns? There's actually two of them, and they're both in play right now. And they were both pretty close to bottoming here on Friday. And now you could see the market moving to the upside right now. And that is right here, that day right over there. Look at the low here and here and here. You see that? That lines up with each of these bottoms over here. That's the dashed blue line that we're following right now. It has some dominance. The rally up in here, but we think it's not going to get very far and then move down as this bigger cycle you see right over here is coming to the downside. So we think there's only minimal upside available, even though you have this big update on Friday. That safety bid coming in. If China does explode, you will see it be affecting the dollar. We're lowering our expected range slightly right now to 100.60 on the upside. We said 100.80 before, and you can see it tagged it over there. We got pretty close right up over there. So that's what we're looking for, the upside. At the most 100.60, probably not as much. This VTL, valid trend line, is at about 100.40. So you can see where we're getting that information. The downside of this right over here is about 98.70, 98.80, but this VTL coming up right over here is at about 98.99 or 99, we'll just say. And you could see the 89-day moving average also in play right over here. So if it breaks out one way or the other, it should break out in a big way. We're going to say the sum of the evidence is suggestive of the downside. Now, there's something in here in the correlations to other other currencies that you don't see because that's in future speak when I talk about that. And I'm telling you that most of the other currencies look very good against the dollar, or the dollar looks weak against them. And that's why I think this upside move we get here is temporary. Maybe they let the demonstrators in Hong Kong just happen. They don't bother them. And it quiets down a little bit. That would be the smartest thing for them to do. So if that's the case, the dollar's going to tick down again. And I don't think really there's much upside here in the dollar when I look at that. The bond market, or what used to be the bond market, is just not tradable. When I see this, it's been this sideways action right over here. We were bearish. We thought it could come down a couple more days. Our targets were way down over here, and then we raised them up to here, and then this is what the Fed has done. Momentum is not worth anything looking at. You can see when the slim ribbon lays on top of itself, there is no momentum, and that's the issue in here, is the Fed has just killed it. So we're potentially looking for upside in here. Those of you that are level 3 and 4 members have seen the trade idea that we put out on the bond market. It's reflective of what you see here because the risk rewards now favor the upside here in the bond market. So you can get our trade ideas, which are doing phenomenally well, by becoming a level 3 or 4 member. So that is a look at the untradeable bond market. If you're a daily scalper, it's got to make you crazy. Swing traders, well, there's some opportunity, and that's what we're looking at in here for a swing trade in here to the upside. Some of the evidence is that the Fed is just killing the market in here. It's still going to be stuck. No momentum to see. Slight chop with a potential for an upside breakout of this pennant situation that you see in here, that it's been just moving sideways in and getting tighter and tighter. So now let's talk about the stock market. The stock market has gone dull on us right over here after that big up day on Monday, and now just kind of narrowing its chop. Also making slightly higher ground. We thought that the stock market would pull back and then move up again. Where we missed it was that we didn't know that Monday spike would come, so it didn't pull back. It just did move up again. So we get only about half credit for that. We're going to up our range, and I'm going to show you this slightly because the market has moved up a little higher. I'm going to move to SPX and look right here. You will see on this chart the formation of positive cycle patterns. Now, remember what I showed you in oil, the negative cycle pattern that then became positive, the configurations being positive. Well, oil and the S&P 500 are pretty much tracking each other when you look at this. Oil, of course, made its low in May, and the stock market made its low in March. That's the only difference, but overall, the patterns are very similar. So we've put in a few numbers for you in here, and first of all, you've got to see that momentum turned up in the market right over here. And that said that these cycle patterns that we're setting up in a positive way would likely get you to higher highs. We, despite the fact that we have believed we're in a bear market, we're not going to say anything other than what's positive on the short term, because that's what the markets are telling us. When a cycle shortens like this to 16 days, it tells you, and you can see in here 20 days, 19 days. When they do that, they're anxious to buy. And that is a condition that is supported by this upward momentum that you see right over there. And you can see the buy signals coming in right over here. If you don't understand that, you've got to look at my favorite study pair, and that is in our library, and you'll learn about how to use that. That's fantastic signals that we get out of that all the time. So that's all positive right now when we look at that in all of the indexes. So we're in this upward trend. We nudged out this island top, still not much over that resistance area. So the key levels that we're looking at right in here are, first of all, this cycle low right there. That's what's important, and that's at 27.67. If the market falls and gets below that level, it's over. The upside correction is done. That's a long way down. We don't expect it, like 180 points to the downside. It just doesn't make sense right now based on everything we see. What's more likely is a test of the high that it made right over here, you can see, which is at the 29.80 level. That's, again, only about 38 points to the upside. If it can't get through there are some issues. That means that the resistance from the intermediate that we've had in here is stopping it. We think it'll get through there, honestly, based on what we're seeing in here, and that the highest probabilities is that it will continue to move higher with an outside chance of getting to 31.43, which is the key 78.6%. If it would do that, then the NASDAQ will make an all-time high, and you'll get a divergence between these indexes, which historically has made market tops. So it is potentially an extended top being made here in this bear market, with the Russell way behind on that, the Dow way behind, and the S&P 500 way behind, only at the 78.6%. If it gets up here, right now trading right now the 61.8%. So all of that, doesn't show the broad market as a tower of strength compared to the leadership that we've had in the stay-at-home stock techs. So what ultimately we're looking for here is some further rally that takes you up here into this mid-June period, from first to second, we'll call it maybe the second week of June. And then the risks are really picking up as we get out into the late spring and into the summer. So you can see our projections in here. It looks positive to us. The cycle patterns, positive. The momentum patterns, positive. The only thing in here is this 89-day moving average and the 61.8, which is causing it to stall. And of course, when you look at the note and real, I'm going to just make this a little closer. There's no real declines in here with this threat of China-U.S. relationships breaking down. So it doesn't want to tick down, and every time intraday there's a little downtick, buyers are coming in. So this is a bullish pattern. Our expectation is that it will chop its way up for the next couple of weeks. You might get a little piece of downside in here. The middle of the slim ribbon right there, you can see is right around, what is that, 29.10 approximately. So if we had a little bad news over the weekend, you dip down over here into the slim ribbon, we would then expect it then to move up again after that, because that's a long way from any kind of a real breakdown, and that would just be a minor dip. So we're going to call maybe down a little bit early in the week, and then starting to move to the upside again. Now we'll see. We're going to learn a lot from how it can move up in here as we get into late May and into the beginning of June. If it can't get up into these areas that we're talking about, then the weakness will be very apparent, and we'll be moving down again. Again, the important numbers way down over here at 27.67, some support right over here at 29.10-ish, 29.05, and then the resistance here around 29.80 on the top of that. If it gets through there, don't be surprised to see an acceleration to the upside with an outside chance at 31.43. Bullish patterns we're looking at, bullish momentum. The sum of the evidence is that all of the momentum indicators are positive. We expect it to take us up for a couple of more weeks, and then things likely to change. That is it. I hope you found the information to be extremely valuable. I tried to make it pretty comprehensive as we looked at this. Again, holiday week, so a little shorter show that we did. Wish you a great Memorial Day. Have fun. Be safe. I want you to be so careful because it is so crazy out there. And I'm always wishing you great trading.
Well, I'm going to the city and I'm going to a city.